Hello, YouTube. Is it time to buckle up? Meaning, is resistance now going to still act as support, or is it going to act as true resistance where the pattern or the channel, bottom, top, bottom, top, bottom, top? Are we going to go back down to the bottom? We're going to compare some charts today. We're going to go through key levels, but the headline says that we might be heading into recession. And this is what the headline talks about. Media hopes for no recession, but forward-looking data suggests otherwise. If we look at the heat map for the last 1 week, well, tech is clearly doing really well. And as we just alluded to, the Russell is down, equal weight S&P 500 is down, but the NASDAQ is up. And that is why the S&P is basically flat. So we're going to come back and talk about all that in a moment. But where I want to start is actually by talking about these big tech companies because Apple's increasing its Apple One price by 17%. Pause the slide if you want to compare the numbers. I'm looking at this one here. I know because I got the email. And then I also got an email from Microsoft saying that on November 24th, or right around Black Friday, my price is going to increase by, I think it's 18% here. Oh my goodness. This does not look good, but it could help explain the reason why these blocks are big. Why? Man, what am I going to do? Not pay Microsoft? I'm going to not use Office 365. I'm going to cancel my Apple TV. Well, I might, but I'm probably not. And when we think about inflation, which we will come back to in a few more minutes, let me just see if I can preview that. So we're going to talk about fear and greed. Let's just get to that right now. The market's a little bit fearful. So yeah, it's great the NASDAQ is up. We need broader participation. So we can look at this chart, which means we're up by 50 cents or 435. We can look at the heat map, which means, whoa, so lots of bright green, but man, lots of bright red. Why are these ones so red? Well, that's what we would normally see. Less energy demand if we're going into a recession. Man, those blocks or energy look pretty red. We'll talk about these levels in a minute. I'll circle back near the end of the video. Let's start off by talking about the government debt. So yesterday, if we try to simplify the story, I'll make it really easy here. We'll go to a 1 hour chart. We'll look at a yes. And yes, in yesterday's video, I talked about Jerome because, hey, do you know what a 30-year auction is for treasury bonds? Probably not. When you see Jerome, you're like, oh, I know Sugar Daddy Papa Powell. I know what he does. If you look here, so first leg down into the hour before Jerome Powell spoke, $24 billion auction. And then we get our secondary leg lower on Jerome's remarks and Q&A on the panel. So what does that mean? We've now retraced, if we delete all the lines, we've retraced, let's just get rid of everything. We've roughly retraced the Jerome Powell move, but we have not yet retraced the Treasury move, which means that the Treasury move is actually a little bit bigger, right? The range here is a little bit bigger than Jerome. So we're about halfway there. And the reason why, I think I previewed this briefly yesterday, is that $7.6 trillion in U.S. government debt will mature in the next year, adding pressure on rates, adding pressure on rates, adding pressure on rates. That's 31% of all outstanding U.S. debt. If we think about the number that was actually auctioned yesterday, let me pull up the number. It's a 30-year auction. I think it was $26 billion. I'm doing this on the fly, so hopefully you can appreciate it. Here we go. Let's pull it up. Let's see what it told us. 24 billion. So 24 billion is tiny. Why? Well, we're looking at 7.6 trillion. So if we pull up the calculator, make this really simple. So 26 billion divided by 7,600 billion. That was a third of 1% of what we need to sell. Bonds went up by I think it was like 3%, and stocks tanked. So this is like a pretty big problem. Why? Well, we're going to be maturing 7.6 trillion or over 600 billion every month for the next 12 months. And then we also have corporate debt, which is going to hit a debt wall, which means that they're going to have to mature, roll it over. And that could cause companies to fire people. This is going back to August, but it's still pretty accurate. Before we go further, we're going to talk about Jerome in a minute, but I'm going to ask you for a huge, huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. We do publish stock market videos every single day. So to give a quick preview, let's talk about, we'll come back to that at the end. A soft landing is always the start of a recession. So it looks like we're coming down nice and soft, nice and soft, nice and soft, nice and soft. Oh my God, what happened? Whoa, that wasn't so soft. So hindsight is only going to tell us whether or not this is a soft landing or not. I believe this was the recession here back in Q1 and Q2 of 2022. So now we're going to come back for a double dip. If it's a double dip, it's probably going to be the big one. Those are those delayed effects that you see from the Fed. People are also getting a little bit more fearful. We hit a high of, I think, 45 yesterday, just briefly touching neutral, smack it right back down. And we're going to get a lot of data next week. But what I think is really important is that Jerome is not actually in the driver's seat as much as you might think. When we looked at this chart, what I pretty much told you was that the move lower from a third of 1% of what we need to sell over the next 12 months is what created that first big red candle, which broke that 8-day winning streak, which did not make it 9. And if we think about the second leg lower, that was Jerome. So Jerome is important, but I think the fiscal side, meaning the government, is more important. And what people are going to command is a premium to get paid. So that's really important. We've also talked about how we have other people, meaning other countries, who are trying to sell debt. Read this headline and tell me if it tickles your fancy. Cyber attacks force world's biggest bank to trade via a USB stick. That's the ICBC from China. And I encourage you to read the article. It's from Time. Whoa! That's I don't know if that's a coincidence. It's from some Russian hackers. It's called some gang. Let's see what it actually is here. Give it a second to load, and then we'll come back to it. Let's just hit refresh. Maybe Chrome needs a kick in the butt. There we go. Internet's been a little bit slow today. Looking at the headline, this matters because Biden and Xi are going to be meeting next week. And we know that China's been selling a lot of stocks, but also a lot of treasuries. So where is it here? With some gang. Here we go. Criminal gang with ties to Russia who has hit companies like Boeing, Ion, UK's Royal Mail. Cool. Is that a coincidence? I don't know. But these guys are going to be meeting next week in California. I'll be paying attention to that. We also heard that Japan's cabinet is set to greenlight $88 billion in extra budget to stimulate. That's what it's for a stimulus package. So as we look to these weekly charts in a few more minutes, we're going to understand what is high. It's the stakes. And the EV market is set to surge to $57 trillion. So why no bids for Tesla? This will be interesting because we're going to do a Q&A with a material CEO later today. And then the second half of the show is going to come back on for our regular stream. Come and hang out with us if you want. So with Jerome now out of the way, the market has more data to focus on next week as we get closer to the next FOMC meeting. So we got CPI, which at least for now, these numbers look good. Contraction for Japan. So maybe that's why they're stimulating. We see that negative number here, negative 0.1. The UK just avoided a negative print right now. Same thing in Canada. But CPI is coming down to 0.1. Man, that would be very well received. What's this headline number going to be? I'm not sure. And core month over month is coming in line. If you looked at PPI, producer price index, also coming in at 0.1, man, that looks good. Retail sales going negative. Oh my goodness. That's good. PMI coming in red. And then CPI in Europe on a headline's coming in at 2.9. Whoa, if those numbers all come in line, that looks pretty constructive. So as we're now wrapping up the show, let's focus on some key numbers because this is a daily level, a weekly, and a monthly. Same thing for QQQ. So we got daily, weekly, and monthly levels. Because we're looking at a preview for the close of the week, we're mostly going to focus on the weekly ones. What I'll note is just this really fast. If we go here to QQQ and we keep in mind that, let's just go back to what's the right chart here? We're looking at a weekly one on the right-hand side. There we go. So on this weekly chart, we've already dipped 10%. We've broken the channel. We're battling for the 70% retracement at roughly 375. And that's also going to be our monthly high here. We got 373.74. Here we got 374.8. So I understand why it got so high. So we're looking at 364, 369, and 374. We're over all those areas except for the last one. We're within kissing distance of it right now. So if tech starts to roll over, that's the really big warning. If the NASDAQ goes down, I'll be getting concerned. For the S&P, 432, 436, 439. Where's the S&P right now? Well, it's currently at 436. So we're currently at 436.3, which is a weekly higher high. And it happens to also correspond with a 5% dip off the top. So it's no coincidence that that's where we are roughly resting. We made it down to 409, or we did breach that 10% dip. And now we're dead cat bouncing to recoup half of the move back up to the negative 5% dip. Hopefully this makes sense. I know the math can be confusing. So for the S&P at 436, we're currently above 432. We're battling for that weekly higher high right now. Tune in for the final hour if you want to see if it holds. And then 439. So if both the S&P and the NASDAQ claim 439 and 374, it gets a lot easier to have that Santa rally. Why? Because over previous resistance means that it's easier for us to rally. And we talked about the gateway for the bulls being, let's go really fast here to a spark line. We're going to go to a line with markers. We're going to hide, and we're going to go to a 1 month. We talked about 429 being that gateway for the bulls. Well, we got over that. This is the last step. And looking here to QQQ, We're looking for that same thing. The gateway was 358 basically, and now we're looking for 374 to run a test to the relative high, and then God forbid, maybe even go to new all-time highs. So with that said, I thank you so much for tuning in. If you want to come see the interview with Brian, you can tune in for our final stream at the last hour. If not, thank you so much for tuning in. I look forward to seeing you in the next video. Thank you.